Hello everyone, Maurice and welcome to Tanks Invest, where we talk about investing, finance, and professional development. For today's video, Ethereum members only. The investment we're going to talk about today would be Ethereum, ticker ETH. First, I want to just say happy Saturday, everybody, and hope everybody had a great week, and hope everybody is spending great time, with your family and your loved ones during this weekend. And so this morning, I was having my cup of joe in New York City. It's a beautiful day today, so I'm planning on actually, staying out relatively active and outdoor today. Maybe going for a run at Central Park or something like that. I don't know. But Ethereum's currently down about 4% so far, right? So I want to quickly hop on this camera while I'm having my breakfast at the same time. Just to inform you guys, also like keep you a peace of mind on what's really going on here. Why are we trying to sell off on this weekend, and what price point should we be looking out for in case you are thinking about buying the dip or for the dollar cost average, and what level should we be looking at going forward on the forecast for the price point for Ethereum going forward. So stay tuned, stick around, let's make some money. Alright, so moving on to the technical analysis for Ethereum, just to recap on historical trend perspective first. So you can see that ever since in April 23rd, we were, basically pumping from the $2,130 level, which is a strong substantive consolidation level that we've formed historically. And ever since the Coinbase IPO and the SNL debut that Elon Musk has, performed for us on the subsequent weeks, we pumped up all the way to the 4,383. And also subsequent to the show, because of the poor depiction that Elon Musk has, kind of pictured for us with respect to the Dogecoin utilization, which subsequently had some negative correlations, that subsequently popped the balloon, if you may, across the whole cryptocurrencies market, right? And ever since then, we kind of just sell off with one big institutional selling, and then subsequently a lot of retail investors follow through. And that's how we were able to drag down all the way to the bottom, right, at the 1,850 at one point, and then subsequent because of just like more bearish pressure on top of this like poor consolidation level that was relatively non-substantive, right? You could see that there was no consolidation that was formed prior, and immediately because of this really quick sharp dip, we had a really quick sharp pump, and that also reverses at the same time. We subsequently tested this another escalated bottom, and subsequent to that, we made a lower low at the 1731, which was truly the bottom that we've tested. And the reason that we got there is because of this psychological resistance that we tested back in the day on March 27th, which was a long time ago, if you think about it that way. And then immediately we got back that up because that was people thought that was the dip, and you were right, that was the dip because of the because of how dragged up the MACD was, and with respect to our side at the same time. And ever since then, ever since that big drop, we've been kind of consolidated ever since May 24th so far, right? And you could say that we've just been kind of hovering between the levels of, and I have identified these levels for you guys for quite some time now, in case you want to day trade or swing trade these levels, right? The top would be somewhere around like the $2,750 level, or 2,785 to be more exact if you want to be extremely precise, or at the bottom somewhere around like the 2,447 or 2,450, which I've also defined for you guys, right? These are the levels that we're kind of bouncing off, up and down, up and down, up and down right now, right? Or the secondary level that we will even potentially bounce down to would be the 2,150, which is the 52 weeks average that we have also been tested for a long time, right? So that's a very strong level for this like whole pinball machine thing, right? So why sell off to today? Why are we experiencing this 4% today? And I think the reason is because for a couple of reasons, right? Firstly, is because we are consolidating on the sideways fashion at the moment. So we are basically hitting the walls on the peak top, right, at the 2,800, 2,785. So with respect to just like how the trend is going, that was just a psychological resistance that people were looking to sell. So that's why we're driving this sell off. And in addition to the timing of it, why is it selling yesterday and why is it selling today, is the weekend effect that I've mentioned in my previous video before, right? Typically people like to be relaxed. They like to feel secure during the weekend. They don't want to be freaking out about like, oh, is my stock price or is my cryptocurrency price point like dipping? Am I losing money by the minute? In that like type of short-term mentality, right? So people just want to basically secure profits ahead of the weekend, or during the weekend, so they could like go out to the park with their family, or go out to, get drunk, without worrying about checking their Coinbase app or like their Binance app every single second, right? So this is just some relatively, minimal selling pressure, majorly driven by obviously the short-term investor pool in this equation, right? So what I see going forward from here, is relatively the same that we are going to be expecting. So we're going to go down all the way back to the 2,450, right? And we have a 50, I would say more like a 75-20% of likelihood by bouncing back up. I'm gonna give it like a 60-40 actually. We'll bounce back up from this level and then go back up to this 2,750 and go back down again. Or if we have even more, in terms of like the diversification of short-term investors versus a long-term investor, we might even get down to like the 2,150, right, from that point, right, which would be a relatively larger sell-off, right, of close to about 10% from there. That's likely, but I think, with respect to how Saturday is shaking out right now, I think, yeah, we're gonna see more selling pressure. But with respect to the MACD right now, I don't foresee us to be that drastic, to be honest, or at least not that sudden. So something to look out for, and I think, if you're thinking about like more of a short-term trader perspective, again, right, the 2,450 would be a first level to buy in. The 2,150 would be a second level to buy in. And then you just like buy at those levels, scoop it up, and then you wait until it go back up to the 2,750, and then you go back down again, right? So buy at these levels that I've identified at these low 2,450, 2,150, sell at the 2,800, and then continue to do that. That you probably get like a couple $100 here and there on a weekly perspective, right? And one last thing I want to talk about before I go would be with respect to the CPI report that we'll be getting on next Thursday, right? So on the 10th of June, the CPI report will be a pretty large market catalyst on influencing the equity market, right? So contingent on a positive CPI report, we might have some selling pressure across the cryptocurrencies market, because cryptocurrencies, as I kind of characterize it in the previous video, is kind of like a safe haven type of investment vehicle, right? So when there's more positivity, in the equity market, people tend to like, liquidate some of their safe haven investment vehicle, right, to, chase the pump, if you may, right? So contingent on a positive media affectations around the CPI report and the status of that, we might have some sell-off. But if the CPI report is actually negative or mediocre, which has been historically for the consecutive months that we've endured so far, that every single time the CPI report comes out, we have like a slight pump in the equity market and then a big dump in the equity market. And every single time you could see that it kind of pumped up the cryptocurrencies markets, kind of subsequently, right? And incrementally every single time, right? So that's possibility, right? So that's a major catalyst that I would look out for on Thursday, on the 10th. So I do foresee the CPI report to be negative based on my assessment and based on just historical trends. And I don't have any bias on why I'm saying this, right? But it's just that because of the fact that we just have had negative reports consecutively, month over month. So the likelihood of us getting the same thing again, or something mediocre with the same hype and then like disappointment type of feel, would be likely. So I do foresee, if there's a negative CPI report, we should see a pump for Ethereum going forward on Thursday or sometimes around that time, like later next week. So something to look out for. But again, just because of what I've said, don't load up your money. Don't put all your money into this into cryptocurrency just to hedge. Expect that that's gonna happen, because you don't know, right? The CPI report might surprise you, and it might, kind of, you don't want to be stuck holding the bag for a short term, right? And or long term, depending on just one report, right? That's kind of like a break it or make it type of mentality. You never want to throw a Hail Mary or like bet all your money into one shot, right? You always want to chip your dollars away slowly and slowly and build that dollar cost averaging. And also, by doing that, you're risk mitigating your risk profile at the same time, that eventually long-term perspective, on a macroeconomic perspective, cryptocurrency is going to grow all together, that it will just have that subsequent drag effects that you will subsequently get that profit, that long-term value proposition that you're seeking. All right, so just to break down all the numbers that we just talked about in the technical analysis, I think the fair price point for you to get into would be the 2,450, which would be the first substantive consolidation level that would form historically, right? So if you buy at these levels to swing trade would be great. And if we get down even more because of just like, I guess more short-term investors decide to sell during this weekend, getting down to the $2,100 level would be possible, but I think the likelihood would be relatively low. That's like a 10% correction from here, right? So I think that's a great level to buy in if you want to buy, for a swing trade perspective, but for a long-term value gain perspective at the same time. And with respect to this like black swan event number, right, the 1750, do we see us getting there this weekend? I would say no, but there's a possibility that we'll see that maybe sometimes later in this week on Thursday or Friday as the CPI report comes out. If the report is really, really positive, right? Equity market will be pumping, and in reverse, as a negative correlator, cryptocurrencies will be dumping. It's just the way it is, right? Whenever gold is spiking, equity market goes down. Whenever equity market goes up, gold is dipping, right? So it's kind of like a comparable reverse relationship that they have. So something to look out for. And with respect to my target on 12 months, 950 or 980, contingent on obviously, again, right, all the macroeconomic factors, further sustain the progression with the 20% corporate adoption. And again, that's a relatively conservative level that I been emphasizing, right? We're currently at the 5% mark. We've seen the 10% mark. So for us to get to 20% in the next 12 months, knowing the fact that it took us maybe like 2 months for us to get to this level at the 5,000, like the 4,430, wouldn't be surprising for us to get to 4x of your money from here, right? So I think still conservative at the level right now. And if you buy at these level, it's worth to hold your breath for going. All right, so that's it for today with respect to my technical analysis on Ethereum. Really hope you guys have a great weekend and spend great time with your family. And don't be so worried about what's going on right now. Like, this is supposed to happen, right? This weekend effect, and also with respect to this like macroeconomic effect, how people are treating investments, vehicles in a psychological perspective. Hopefully, gain some great insights and, more clarity and transparencies around like how you execute your trades going forward, so you can make the right decisions for yourself for long-term gains perspective. Yeah, so I'm gonna go finish my breakfast here. Really appreciate for you guys for dropping by. Please hit the like button, also that subscribe button, also that bell notification, and please watch out for the next video coming up. Take care.